Good afternoon, everyone. Once again, this is Black Forest coming to you with another market breakdown video. Today, we're going to be discussing the commodities. We're going to be discussing gold and what's its outlook going to be for the next few trading weeks and for how it should go for short term and for the long term. Okay. Now, with that being said, remember that this video is for educational purposes only. This is not for trading advice. Okay, now we got that out the way. Let's go ahead and discuss what's been going on with gold. Okay, so gold, let's go to the charts. Gold, it did shoot up a lot since the start of the Ukrainian incident. That's basically when this right here around this time is when gold started to shoot up. Okay, because it's considered a safe haven currency. So when the world was very uncertain about the Russian-Ukrainian war, gold did started to shoot up, but over the past this week and the previous trading week, it has been going down some. Okay, now this is solely due to that over this time they were actually discussing increasing the interest rate, which actually led to which actually led to the increased rate interest rate dropping, which caused the dollar to go strong. Now, one thing that we know is economics 101 is that when the dollar is strong, gold is weak, and when gold is weak, the dollar is strong. It has an inverse relationship. Okay, so this is why gold prices started to fall. Okay, but now we're going to further discuss what is the potential outlook on gold going into these next several trading weeks. Okay. Now, gold did push down since the biggest decline since November. There's one particular point of the article I do want to speak and comment on. Okay. The dollar is seeing massive inflows that is short term troubling for commodities. Analysts for Europe on online trading platform in Orlando, the dollar will benefit from a rapid improving interest rate differentially, a steady safe haven flows as investors become worrisome over the war in Ukraine impact on inflation and ultimate growth. So basically, to give a quick interpretation of that, they're saying that that the U.S. dollar has acted as a safe haven commodity during this European war. It's a non-traditional safe haven commodity because the true safe haven, the traditional safe haven commodities are the Japanese yen, gold, and JPY. I mean, excuse me, and the Swiss franc. Okay, but gold and the dollar has been acting more so as the safe haven currencies, being that it is the U.S. American government who is spearheading the economic sanctions against Russia. Okay. And so the dollar has acted as a non-traditional safe haven currency, with the gold acting as a traditional safe haven currency and it going up. So part of the reason why gold solely just started to come down was because due to the talk of the interest rate going down and then the actual interest rate, due to the talk of the increase in the interest rate and then the actual interest rate did increase. You have to understand in trading, once they start talks of certain economic policies being put in place, they do have an effect on the market. And even if that policy is not in place, if they're talking about it, it can make the market move. So you have to understand that. Okay. But gold is going to be the real tester to see whether if the increase in interest rate is going to further help the USD get any stronger. Okay. Because if we start to see USD gaining strength on our Forex charts on the Forex, right? And we started to see USD gaining strength, where if it's on the right hand side, those pairs are selling off, and if it's on the left hand side, those pairs are buying real strong. But then if we start to see gold is not steadily dropping below about 1900, because gold at 1900 is very high. If we're still seeing gold remaining at 1900 while the USD is still showing strength, that's not a good sign for long-term strength overall for the USD. Okay. What we would like to see, what everybody would like to see, is that the USD is gaining strength while gold is dropping below 1900. Okay. So if we start to see the USD is gaining strength while gold is dropping below 1900, then we can safely say that, okay, the interest rate increase did help with the inflation and is on our way towards making our economy a lot more stable. Okay. But if we see gold still showing strength, but the price of gold, I mean, excuse me, we started to see that the US dollar is showing strength, but the price of gold, right, is still staying above 1900, then it's pretty much safe to say that we put a band-aid on something that needs surgery, and we're going to need further economic policies and economic actions by our government to be able to combat inflation and fully. And gold staying above 1900 while the dollar strong is an indicator that the dollar's only going to be strong for a short while before it starts to precipitate back to weak again. Okay, so just for a quick overview, the US dollar is going to show some strength over the next couple of trading weeks due to the increase in the interest rate. But in order to test that out, like our litmus test to it, is we're going to see how gold behaves. If gold continues to drop and drop very aggressively, then we know that the increase in interest rate is combating inflation with good signs of stabilizing our economy. Okay. But if we start to see the US dollar pick up in strength, but gold is ranging or staying above 1900, then it's pretty much safe to say that this is only going to be temporary, and pretty soon the US dollar is going to start performing weak again due to the fact that the interest rate did not combat the inflation like they thought it would. Okay. I hope that information was helpful for you guys. Happy trading.